Hi guys, Harry Yotis here, professional trader for 20 years now. Started my career in 2005 and still going strong in 2026. So today, a fairly muted day. It's Tuesday, the 10th of February here. This is the candle right here. This is a picture of the S&P 500. We always look at that first. And basically it's profit taking right before Wednesday tomorrow, because tomorrow is where the NFP report, the non-farms payroll report, will come out, the jobs report, and people are just taking profits ahead of it, being cautious. Okay, today is probably a muted day, and I thought I'd take the chance to talk about a little bit about trading psychology 101 and how basically CNBC is out to fool you. But before we get to that, let's talk quickly about the technical picture. It's still bullish. We're still above the all moving averages. Even with this profit-taking day, we're above every moving averages, from the two short-term to the 50 to the 100 to the 200. Okay, there's not much more to explain here. Technically speaking, nothing has changed. We're still in bullish territory. The sentiment, what does that say? Well, because we went down, we're back down to neutral and almost back to fear. Okay, all the sub-indices are pretty much, strength is still very good. Breadth is still very good. No need to worry, but momentum is at fear. And of course, the put call ratio is still people buying a lot of puts, okay? So basically, we are still in this like fear type territory, neutral territory. We're certainly not in greed or extreme greed, despite the markets being near all-time highs, maybe 1% from all-time highs, which is beautiful. It's exactly what we want to see. Okay, so technical picture bullish. The fundamentals haven't changed. They're still fairly bullish. Nothing has broken down yet. And the sentiment is bullish because it's close to fearful and neutral. Okay, so everything is in our corner. So let's take the time today before the big non-farm payrolls report tomorrow on the 11th of February. Well, today is the 10th, so let's talk about trading psychology. What do I mean by that? Okay, what I mean by that is that you will get a lot of news coming out that is negative, especially as the market goes up. As a bull, you want to see that. You want to hear all of the negative news. And what you really should be looking at is the effect of this news on the market. Like we saw the Bitcoin crash a while back, the capitulation on Bitcoin. It basically just took the market down 3%. And that was a true capitulation. Like people were selling other assets to raise capital for their Bitcoin losses. So they sold gold, silver, and general equities. And that's why the market went down 3%. But as you notice, it wasn't as big as last time where the market went down over 4% on the same news. Okay, so it's getting more muted as time goes by. People are not falling for it. There are not as many levered hands in Bitcoin anymore, and the market recovers fairly quickly. Okay, right now, the big news is that the AI threat from CNBC, of course, the king of financial media, the AI threat wrecked software stocks. Now financial stocks look next, with LPL down 11%. So basically, we saw before that you should stay out of the SaaS market, the software as a service business. We saw stocks like CRM getting destroyed because AI is killing their business, and that's legitimate. Okay, AI is killing these guys. These guys have no business model with AI there. Okay, look, they're going to announce earnings very soon. I mean, if it's bad, it'll probably be a huge flush down. Okay, I just don't see anything going forward in this sector. We had ServiceNow. Okay, this is a legitimate thing. Okay, like these companies are down from, like ServiceNow, down from 230 to 100, more than a 50% haircut. Okay, and it's an entire software sector, which was a leading sector going up into this game, right? But what did this do to SPY? Absolutely nothing. It's just one sector in the market. Everything else is doing great, and AI will replace it. So the net benefit of AI is greater than the net loss of one sector. Okay, so you hear all this fear, uncertainty, and doubt FUD about SaaS, and it's true, but it won't tank the market. Okay, and the other big news, the big news of this thing is that LPL, financial services firms here, will tanked after the launch of the new AI-powered tax planning tool that promises to do the work within minutes. So a lot of these tax planners and financial services firms will take a hit. They mentioned LPL, which is, the stock symbol is LPLA. Now, what happened to this stock? Wow, that's a huge candle. It's down like 8% on the day. Okay, but zoom back, it's pretty much on an uptrend. Now, is it going to be a one-day phenomenon? You'll see the move. Is it going to be a one-day phenomenon before it goes back up? We don't know. Charles Schwab also took a hit. Charles Schwab. Oops, sorry, Schwab. One error. W. Come on. SCHW. The Charles Schwab Company. That is down significant, but still from highs. Okay. Now, is this a FUD thing? Will it destroy Charles Schwab? No, I don't think so. It's gonna have. It's not. I don't think it's gonna turn it into a CRM type of chart where it's a true disruptor. Okay. Charles Schwab has other things going for it, so it probably going to rebound fairly quickly. I don't see the destruction here. And it says it's the end of the financial services and financial companies. Well, what are the banks doing? And the banking sector? Well, JP Morgan, nothing. Okay. Citi, nothing. They're basically at highs. The banking sector is very, very healthy. So this just adds fear. There's every kind of negative headline at the top is perfect for SPY climbing the classic wall of worry. What you want to, be fearful of, when the fear really should set in for you and for me as a bull, is when you have not these kind of stories coming out, but stories like AI will be revolutionary, everything is super positive, okay? And then the market starts going down. And then all these positive news comes out and the market still can't catch a bid, okay? Which now, it's the exact opposite. You have negative stories everywhere. The Bitcoin thing, the AI destroying everything, SAS dead, and the market is floating higher. It's completely disregarding that. So this is a classic wall of worry, okay? And this is why Trading Psychology 101 is telling you, okay, that people react to negative news more so than they do to positive news, but you want to see the market's reaction after that, okay? The market's reaction is the most important. That's why I always look at the S&P 500 first. I want to know where the market is going, okay? That's the most important thing. It's the biggest tailwind for stocks. If the market's going up, your stocks are probably going to go up. Not the SAS, not the SaaS stocks. But I don't think, like if you look at XLF, which is the financial sector, yeah, it's a little bit down, but still at highs. It's very, very healthy. Okay, and we also saw other sectors like the semiconductors doing very, very well. So this news, very negative news is happening while everything is still looking very good. Okay, that's why it's Trading Psychology 101. Don't look at the fear. This is actually positive for a bull. Okay, you're going to get fearful as a bull. At least I will, when I see just good news at the top and the market not really catching a bid, starting to roll over, starting to go down when everything is positive. But right now, everybody's fearful, and we certainly don't have greed and extreme greed in the sentiment. Okay, maybe in certain sub indices, but certainly not in the VIX, and certainly not in the put options. In the put call ratio, we still have people buying puts at highs. So it's the same situation. These stories here on CNBC, these negative stories, bleed into this sentiment indicator. And it's telling you that the fear is still there. Yet, underlying strength in the market, stocks are strong. Even the small cap sector, IWM, like we said, at highs, breaking up this key level, and then retest back up. You have all of the powerful indices that say markets are going up, and we don't have any kind of euphoria. Okay, this is what I love to see as a bull. Okay, again, I will only get scared when the opposite happens. Okay, so that's it, guys. If you like what you hear and see, please like and subscribe, and of course, leave a comment, and I will get to it as fast as possible. But so let's reiterate before we go. SPY. We're already there. SPY, this is just profit taking before the jobs report. I suspect the jobs report will be muted again. Nothing great, nothing super bad, like not a loss of 200K jobs or whatever. And let's see how the market reacts to it. Let's see the trading psychology, okay? Let's see what goes on tomorrow. And of course, Friday with the inflation figures. The CPI is coming Friday, okay? So that's it. Just keep an eye out for trading psychology. Don't be a victim to it, okay? You will see these news reports every day now, this kind of stuff. And that's good, okay? So let's see the jobs report. Let's see how this week goes forward. I suspect we go to new highs. Simply because of all of the factors mentioned, okay? Because that's how markets run. They run on psychology. They run on fundamentals, of course, and on psychology and human behavior. In fact, that's all a market is. It's a mass group of humans placing bets. Later, guys.